So there's these buying opportunities where you're saying, wow, there's a 40 ETH floor on these digits. The guys off camera, I think, are buying right now. Cryptocurrency exchange non-fungible.
Hey guys, welcome back to another episode of the Chain Debrief podcast. Today we're in the studio with three guys from VC firms. So we have Brian and Kenny from ReBlock Ventures and also Sami from Hypernova Capital, whose Brian is also a partner at. So one thing I want to know, how did you guys meet?
Me and Sam met about, I think, 14 years ago, 15 years ago in the advertising industry, marketing industry. We actually started an agency together. It was on the Inc. 500. We were top 25 in the US. Yeah. And also through that industry, we met Kenny probably 10 years ago.
Yeah, probably about, 7, 8 years ago. I was actually in finance at the time. Ooh. And I was transitioning into the advertising world, and I met these two guys online, and I just kind of flew to LA impromptu and kind of transitioned from there.
Were you guys already in crypto then, or was it for Web 2 business?
No, well, for me it was Web 2 mainly, although I did have a roommate in college that was mining Bitcoin but didn't tell me.
Wow. Oh, shit.
So yeah. But we got into crypto later, around full-time in 2016, but a little bit earlier, like writing about it on like the Forbes and stuff like that for the business use cases. But
2015, 14-ish,
Yeah, mine was probably around 16. And I was actually just using it for business transactions, international wires took take a long time, right? Oh. And then it just kind of traveled from there. So kind of by accident, you could say.
Wow, so are you guys like all in crypto now, or you guys still like running like Web 2 business?
100% crypto, 100% Web 3 crypto at this point, and only really investing in those things, or projects that are eventually moving to Web 3, like video games. So even if a video game is Web 2, it's moving to Web 3. You still want to get into that. So. But mainly everything is Web 3 and crypto for me.
So tell me more about each of your venture firms. Do you guys specialize in any specific verticals? Like DeFi, gaming?
I'm really focused on video games right now. I'm actually building a video game as well. It's kind of in stealth mode. So really heavily focused on the video game space, and from an investor perspective too, just really think that's going to be the space that brings in the next 100 million to billion users, personally. Outside of that, really just things that I think there's a lot of other use cases that are very interesting as well. DeFi is obviously something that I'm really bullish about and think that that's something I want to support long term, and we'll see where things go. But there's definitely other great use cases.
Yeah, I mean, I invest heavily in Web3 and AI as well. It doesn't necessarily have to be Web3, but those are my main focuses. But Web3, definitely gaming. I think that's going to be the main catalyst for adoption, for mainstream adoption that we have. Also very interested in infrastructure. So metaverse infrastructure, gaming infrastructure, but also just chain infrastructure, because we need better chains, higher transaction speeds, more security, etc., to really get to where we want to be with Web3. So that's a lot where I'm looking at.
But I think also the marketing, the communities, it's really, you're getting access to entertainment's another one that I'm really interested in, not just music, but film. There's a project that we're helping that did the first NFT movie, and really people can participate and be a part of those communities and those, it's like, imagine owning a piece of Disney or something like that. I think that's what Web3 potentially enables in the entertainment category, especially with NFTs, and the communities around it are so much more engaged because they kind of own some of those characters or IP or NFTs, etc. Potentially now. So yeah, it's way more interesting.
Yeah, fractionalized ownership in anything that's not publicly listed, I guess. Like Brian said, I mean, that goes for entertainment. We've looked at real estate. We've looked at all kinds of things. There's now platforms doing expensive watches, fractionalized owning of expensive watches, etc. And I think that's you have a tokenized owner economy, right? So it's well, we can go very deep into that, but I'll stay at that for now.
but just like crypto did with sort of in blockchain and logistics space and all these industries that can revolutionize, I think we're seeing Web3 and NFTs, like we're just at that precipice of something really, really big happening. Obviously, we're in a crazy market right now, but that's just secondary. It's like we see these use cases that are coming, and there's nothing that's going to stop it.
Yeah, and speaking of the market, like, as we all know, we're like in a bear market right now. So, are there any discernible differences when it comes to projects coming to you guys looking for funding? Like, were there more projects looking for funding or less?
I would definitely say it's less. It has to be less, right? Less people building in a bear market. A lot of people leave in bear markets as well. But I also believe there's a lot of value on the market already. You know, products are already available that you can, you know, research and buy. You know, I'm still quite heavy DeFi. You know, I love DeFi, like just naturally. So, yeah.
Yeah, I think, to me, bear markets are the best.
Yeah.
It's where the most opportunities are. You can scoop up some really, from an investor side of view, or point of view, you have bear markets is where the real builders are. Yeah. They either survive and hustle and struggle through the bear markets to build amazing products. We see from every financial crash, we've seen through history, really, some of the biggest companies in the world have emerged from that. And I think the same with the bear markets. You have some fantastic products being built right now, and they're all at a much lower valuation, because when you're in a bull market, everybody's a genius, right? The valuations are high and everybody throws in money left and right. But here, all the people who aren't super competent leave because they can't find money, quick cash, or whatever their vision has been. But I feel like really now we've invested in quite a few. We've done many investments in this bear market, and it's been really high quality products.
One thing I will say that I think, and this could benefit founders founding projects right now, and I think this is important advice, and I see this a lot, unfortunately, they have priced their rounds and their deals for the structures at the top of the bull market, and they don't understand that, okay, you're presenting a deal now that has a 48-month vest and 80 million valuation on an idea and stuff like that, and some crazy terms, and it's like, all right, that was tough in the bull market if you had an amazing product and an amazing team, but now it's going to be especially tough. So I think they have to adjust to the times for sure and understand, hey, we are where we are. You need to position your deal competitively with what's out there right now.
Yeah, be realistic.
And also in DeFi now, there are projects with revenue generating DeFi protocols, right? You can have a look at Token Terminal and see, weekly revenue, which we didn't have before. Before, things were ideas, people were raising and just building. And now there's earnings, which is interesting. And these projects crash just like everything else did. So there's some value to capture there.
Yeah, interesting. And when it comes to assessing these sort of projects, what sort of metrics do you guys look at? Do you guys mainly refer to Web2 sort of metrics, like the traditional finance scene, or what sort of metrics do you guys look at?
Kenny's the master researcher.
I think, it's hard to pin it down on one thing, because sometimes it's a case of metric, like I said, revenue generating protocols, but then there's also things that are coming with new ideas to a market that's already kind of established, right? So I look at a lot of decentralized lending protocols, for example, and some come and they're doing something different to, let's say, Aave, Compound, et cetera. So, it's very hard to pinpoint one metric, but I tried to look at also the founders. It's really interesting to look at the founders and the people building, if they really understand their space and their niche. That's really important, I think.
Yeah. I feel like this is a funny question. I could go on an hour-long rant, but I'm not going. But we get this all the time, right? Web2 investors want to invest in Web3, and then they go all in on something because their buddies told them something was cool, right? And then they don't understand that it's a Web2 team building a Web3 product, and you forget that in a Web3 world, you have two big things you have to think about, not just one. In a Web2 world, you're building the company. So you're looking at the team, you're looking at whatever round they're in. If you look at the financials, you look at all that stuff. In a Web3 world, you also have to look at the tokenomics. The tokenomics has its own life. And you have to, you can't be a pump and dump scam, of course, but you also have to take a look at, is the team seasoned enough to really handle buy pressure, sell pressure, lockups, exchange listings, market makers, all this stuff, because you usually don't have that in a traditional startup. Ask anyone starting a SaaS company or building a whatever platform, they don't have market makers. You see what I mean? They don't have market makers, they don't have exchange listings, they don't have tokenomics where they have sell pressure or buy pressure for their stock. That's way further ahead when they do an IPO, right? So all of these teams that are starting up, they have no idea what they're doing in a Web3 world unless you have people from Web3 who have gone, specifically if they've gone through a couple of cycles, right, of bear and bull, and you see what's happening. So I think that's the short version of, especially when we look at both equity and token. investments is the team, sure, the financials, sure, all the traditional due diligence, but specifically tokenomics. What's the roadmap for the token? And how is it? Do you really need a token? A lot of these projects don't. You see what I mean? They just want to do a token so they can raise money with the token, and then nothing happens. We've seen thousands of projects doing that.
Billion of those.
Yeah, and they're all crap, right? I mean, so you got to kind of weed out. Okay, you're doing a lot of Web3 stuff. Who's handling that?
Yeah.
Do you have any connections to go where you need to go? Do you have a strategy? Because it also matters in which order do you list? Which market maker should you really work with? Do you have a liquidity provider? Do you have all these things that normal Web2 founders never had to think about?
Yeah, I second all that, because I think, if you're looking at a project, even think of Ethereum even, right? Without Joe Lubin and Vitalik, would Ethereum be Ethereum? No. You needed the gigabrains. You needed the guy driving the business side. So it really starts with the people, obviously. So yeah, I think that's a huge part of it. And but you also see a lot of copycat stuff. You see the exact same thing X57, and it's some of them make some money for a while, but then you got to look for the red flags of why are they really in this. Are they in this to build the next Ethereum, or are they just making a rip of something else to just pump some money and run? So to speak.
Are they greedy? Do they just want to make money, or do they want to build for Web3? That's something I really look at. Like, okay, are you truly building for Web3, or are you just looking to make a quick buck?
And it's a risky slope too if you're trying to chase things, knowing you're seeing the red flags, but people have this mentality sometimes, the degen mindset of I can still make some money before this crashes. And it can be very risky.
And then they're stuck.
And then you get a Luna, or something.
Which fuels the bad behavior in the Web3 industry, right? So
And I guess people also attach value of a project to the price and the price alone, which makes no sense. It's a good thing for people in a bear market that want to find value, because if everybody hates it because it went down 90%, people like me, we will just go and accumulate that if it's a valuable project. And if you look at projects in the bear market last cycle, for example, ADA dropped to 2 cents, right? And if you were looking, you would see that the community was strong, and it accumulated for quite some time before it just went off to 100x, I think, from there.
Chainlink, Solana,
Chainlink
all those.
Chainlink, you remember the Chainlink?
Yeah.
That was great.
Yeah, they had the whole 4chan and Reddit.
People were angry for a long time. All you had to do was wait.
Speaking of communities, when you guys look at projects, how important, how many percent does the community contribute to when it comes to your decision-making process on whether a project is worthwhile investing or not? Because for example, NFT projects, communities are really, really important. But usually for projects which are more not so well understood by the general public, for example, DeFi and infrastructure, how important is the community when it comes to those projects? Yeah,
important, but I think people get the wrong idea, and this is something that I think is really important to pay attention to. People, will look at the numbers and they'll say, "Oh, they got 50,000 followers. Yeah, it's a good project." No, it's probably maybe not. Maybe it grew too fast. Some of these ones that fly up fly back down. So there's a concept called 1,000 true fans. It's based on a book from I think a decade ago now. But the concept is basically if you have 1,000 really diehard true fans, really true fans that buy all your mints, that do everything. You go to all your events, join every Twitter Spaces, join your Discord, AMAs, all this kind of stuff. If you have 1,000 really diehard people, that's way more important than having 1 million followers, 100,000 followers. So you actually want to look at the commitment of those people more so than a new project launches and it's got 400,000 people. You can manipulate numbers. That's one thing, but. So I always look at the quality of the people and how many diehard people would you guess that this project has, and looking at, you can go into this, you can join a new NFT project, and is it all just hype people looking for a quick flip kind of thing? For an NFT project, for example, and what are they in it for? But you can tell when they really believe in something, and those are the ones that catch my eye, because I know this is an exceptional one. If you have people that say, this is Kenny will send me something and say, you got to see this project, and you go in there and it's the community is so engaged. Or Sam sends me something, it's look at this crypto project. It's not just something, it's just a copy of something else. These guys are really engaged because they've got the utility, they've got a real new idea, they've got something unique about it that's exceptional, and then that creates these diehard, I just call them fans, but it's just community members basically. that then want to get involved in things like that. So that's one of the things.
Yeah, I really feel like the days of inflating numbers was 2016, 2017. I feel like any smart or half smart investor today looks at analytics, right? There's so many platforms today that'll analyze your Twitter following in a second, right? And see, okay, how many are bots? And like Brian said, I mean, that's something, we look at a lot is we analyze. If it's all these regular NFT influencers or whatever influencers that are posting about it, they're looking for a quick flip. There's no hardcore fans in there. But if the public, it does, because when you said something about what if it's a project that the general public doesn't understand, that's fine. Because the general public will not understand DeFi or anything advanced for a long time. They'll understand gaming, they'll understand entertainment, but we got to look at the way to adoption is not from people understanding crypto. The way to adoption is seamless integration. Do you understand 5G? Do you understand TCP/IP? We talked about this the other day. No, you don't. But you still use the internet. You still use your phone. You don't need to understand how the microtransactions work on a transactional level. Do you understand how your Visa card works? No, you just swipe it and you buy your chocolate or your pants or your watch, whatever you want to do, right? That's the way to adoption, right? So I think for these communities to be very engaged, even if it's a super advanced project, I think it's very, very important because it shows support. And like Brian said, the whole idea with the 1,000 fans is that, of course, if 1,000 people are always promoting, I mean, it's always going to grow. One person brings another, one other person brings 3 others. Scales really quick. So
yeah, I think in DeFi also, I don't look at community at all. Like just to build on what Sam was saying, they don't really care how it works, just if it's valuable for them. If I want a decentralized loan, do I have to understand the have you seen some of them white papers? I mean, they're insane. You don't
understand anything.
It's like
that
PhD level physics.
Literally. I mean, I just scroll past it. As long as I understand, how it works on the back end, I don't have to understand every single upside down B, right? Or something like that. So.
Okay, so let's go on to talk about the bear market. So we've been in this bear market for almost a year, I think, maybe less than a year. But how long do you think we're going to be in this bear market for? So, I mean, like we're seeing like US doing more quantitative tightening, interest rates are going up, and inflation is also high. So how long do you expect us to be in this for?
I think it's interesting. And there's a book I recommend to people to read. It's called The Fifth Turning. I think it was written when I was in my 20s. And it basically shows the cycles of markets and of generations switching. And I was reading this book maybe like a month ago now, and I had to check the date like probably 20 times when I was reading it, and I said this was definitely written like last month, and it said it starts with a pandemic.
Ooh. And
then it gets into all these other interesting things that are happening right now, markets changing, generations flipping. They need to fund, especially in the US, sort of retirement for the baby boomers. And it was predicting all these like world events. So it started with the pandemic and it ended in a world war. So there's these cycles of the markets that are tried and true, and you can literally trace them back to World War I, I think, maybe even earlier than that. But until there was markets that existed in sort of modern form, and it's very obvious when you look back at these. So yeah, I think we're in this bear market now, and it's all the things that are happening that they say will happen in these kind of markets. And I think around 2020. I think for crypto, the next halving is when 2024. May
somewhere
or so,
or something like that.
So I think around then, I think we could see, if we see a bottoming this year, let's say. Because we were looking at this the other day, and in crypto, for instance, there's these very clear channels that you'll see on like the 1 week chart. And if you take the theory of what's happened the last few cycles, few years, possibly 2024, we could see a nice rebound. But I think it's really hard to predict right now. But my guess would be we go down later this year, maybe early next year, and then maybe have a very kind of meh year next year, and then
Boring year.
It could be sideways. People, because I think until you get to that max pain, you're not really able to call a bottom. And I don't know if we've got to the max pain yet. I hope we have for my own pocket's sake, but I don't know that we have. There could be worse things coming for sure. And this could drag on, but my guess would be 2024 we start seeing some recovery. But yeah, I would recommend people check out that book, The Fifth Turning, if they want to kind of dig into the cycles, and it kind of guides you a little bit of how to navigate these market cycles.
I think even if you forget about macro for a second, market cycles in normal conditions is hard to predict, right?
Yeah,
and I just think DCA is your friend, and DCA is very boring to talk about in the bull market. Until you lose 90% of your portfolio in like 8 months. Then you're like, damn, I wish I should have DCA'd. So now you add macro to that, it's impossible. People in Europe, UK, my family's from the UK, like people are thinking about their light bill in winter, right? Prices of electricity is crazy. So I don't know if people are thinking about buying assets at this point, risk on assets. But yeah, I think, after that, we have to see what happens really. Like, does inflation come down? Does it, taper off and just start to drop? Who knows? Everybody's looking at what the Fed's doing. And I never needed to care about the Fed. But now I have to care. Every decision, every single decision, you have to care about what the Fed's doing. So yeah, I'd just say DCA is your friend sometimes.
I look a lot at macro, and like you said, the Fed, the war, I don't see any major catalyst for triggering a bull market coming up anytime soon, because we also have the regulatory issues. The United States is unfortunately a little bit hostile to digital assets and crypto, and that's a longer and a political discussion we don't have to go into. But I think if they decide that everything Ethereum is a security, that means thousands and thousands of tokens are securities, then we're going to have a massive problem.
That's then, right?
Yeah. then that's a catalyst for a massive drop, right? And I don't want to be the doomsayer here, but that might happen. So I will agree with Brian. I don't think anytime soon, just because we see a couple of days of weeks of like an upturn, I don't think until late 2023, maybe 2024, depending on macro. I don't think we can expect anything like we had, a year ago, where everything is just like 100xing left and right. And I don't know if we're going to see much of that again with the regulatory stuff coming up. Honestly, I don't think we need to see a lot of that either. This is more about long-term vision and strategy, and 100x is always fun. But I think no. But if we look at it from a non-degen investment kind of perspective, I think as an investor at least, consistent returns and being a part of building great products, have a great portfolio is more important than looking for unicorns like a degen in a potential bull market.
Yeah, I guess so. Conclusion right here is DCA is the name of the game.
One thing I will say too is that, especially in crypto, sentiment can change like that, and it's happened both ways. So yeah, we've seen block swan events. It's gone down real fast in the beginning of the pandemic. Ethereum went down to what, really low,
$80.
Yeah.
I thought 200 was the floor.
Yeah. So, but people forget we can have white swan events. It is possible to have good news too, like that we don't see coming. And one thing I like to do is I like to counter trade the average view. So if 90% of everybody thinks this, and if you actually back test it, it's kind of true. If everyone sentiment is one way, it's usually the other thing. So you can actually counter trade. If everyone says we're going to be in a bear market for a year and it's going to go back up in 2024, maybe the opposite happens. So I actually think about that a lot, and it's deep psychology and all that kind of stuff. But
in 2019, when we went from 6K Bitcoin to free, that was like the black swan event. Everyone was convinced we were going to 1K. And it bounced to 14 instead, right, in months. So
that's the thing, and we've also seen. You look, especially in the gaming space, right? We've seen a lot of gaming projects launching during bear and have gone up like significantly. It's just up. So it's just because we're seeing more of that now, where everything isn't correlated by how Bitcoin or Ethereum does. There's all these projects that are doing really well because they're building communities, they have utility, and people are using it, right? So there's always opportunity, especially when the markets are chaotic and total blood on the market, blood on the streets, figuratively, of course. There's lots of opportunities.
Yeah, well, and what people are looking for hopium right now, especially. So you will see these like meme coins. Like we were talking about this. A friend told us about this Tezuka token or whatever, which is kind of cool. But then you see, boom, you see this giant green on the chart, and it's like you see these things happening. So you can see that people want to they want to be positive, but it's hard to be obviously in like these macro conditions.
Yeah, and that went several 100x.
Really?
Yeah.
And you guys didn't get in?
We did actually.
There's still small cap.
Not enough.
There's still small cap. That's the thing.
Yeah. There are a few interesting projects, like you were saying, like that do go up. I mean, the last bear market, Chainlink was going up and it didn't stop going up.
Yep.
BTC, ETH were going down. So I'm sure there'll be a few of those here, but how do you? There's no way of guessing that, right?
Yeah.
You don't know.
Right.
You can't guess that sentiment. It just happens or it doesn't.
Yeah, and I think personally for myself, I've been trying to stop looking for 100x degen coins.
No.
Trying to DCA, trying to DCA, and also trying to stop trading as much because it's really hard to trade this market. And I want to know what are your personal strategies when it comes to navigating this bear market?
Yeah, I mean, I think from a crypto portfolio standpoint, I'm heavily in Bitcoin and Ethereum at the moment. GPDC is also an interesting idea with that because there's technically a discount, blah, blah, blah. So there could be some interesting things there. If it ever comes back, I don't know. But so I'm probably 85% Bitcoin, Ethereum on that side. And then from there, I have different tokens that I really believe in. I'd probably have less than 5 really that have like a nice chunk of a 1 or 2% kind of thing. And then you get into the degen stuff from there and the meme coins and the more long shot stuff, but stuff that you think, you got to stay away. I think in this kind of market now, you get these hopium spikes and you say, okay, let's load up on some real low cap kind of stuff that are more gambles, and those would tend to be a little tricky, especially right now. So yeah, my strategy is mostly stay in the big ones for the time being, which is kind of a boring strategy, but I think it's like the safer strategy. But I've DCA'd heavily out to cash over the last, let's call it 8 months. Not so much right now because I feel like it's kind of it's pointless at this point. So if you haven't done it now, it's not that it's too late. It's never maybe. Yeah, just about maybe. Now it's more buying, right? So I am starting to DCA back in a little bit. So I'm slowly DCAing back in to the stuff I believe in. Not so much Bitcoin and Ethereum, a little bit, but that's already my main kind of stash, so to speak. But I'm getting into more of those mid ones that I really believe in long term. So yeah, that's kind of my personal crypto strategy. NFTs, I'm still buying NFTs actually. Just stuff that I believe in. Like I just picked up a Moonbird and a couple other things. So actually, I'll give some little alpha here. We were looking at 3-digit .eth ENS, and the floor is 40 ETH for 3 digits, any 3 digits. And I think there's like 90,000 possible combinations or something like that for 3-digit. But 3-letter .eth is $70.
Oh.
So I'm saying to myself, and yeah, the narrative now is that the digits are the thing people want to rock on their Twitter or whatever, but if you look at domains, like my initials, for instance, BDE, that I tried to buy the .com, somebody wanted $350K for it. I was like, no way. But I picked up the ENS for like next to nothing. But the narrative could switch to letters. So there's these buying opportunities where you're saying, wow, there's a 40 ETH floor on these digits. The guys off camera, I think, are buying right now, So there's definitely opportunities even in NFTs where those, but the really solid projects, we're talking like the ENS level stuff, the blue chip stuff. I think that's where you put your money for NFTs. I don't know what your guys' strategy is.
Yeah, I think for me, Bitcoin ETH has to always be in your portfolio. That just makes sense. I'm heavier ETH just because when I entered, ETH was the thing, right? And I'm really bullish on that ecosystem. I'm a little bit more degen in terms of investing in projects that are new, not necessarily meme stuff, just things with fundamental value, things that I think that can add value to, the ecosystem. So I'll invest in that. NFT wise, anything Brian says, you just buy or something like
Ape it.
that. Just a Moonbird. Okay, yeah, cool. I'll get one. Too.
Although Kenny gets credit, he's the guy that sent me Bored Apes.
Yeah.
He said, "Hey, you gotta mint this."
Yeah, it's the one thing I
and
wish
had
I
heard
minted
of it.
100 of.
Oh, you minted it at the start?
Yeah, we minted
Yeah,
some
yeah.
Bored Apes. Let them go way too early, but you know, it's one of those things, isn't it?
How did you guys find out about Bored Ape though?
I think at the time I was just what I do research-wise for DeFi. I just try to apply that in NFTs, but obviously it's different because there's a community element, and I just like them, to be honest. And I was looking at punks at the time and the floor. We were discussing the floor quite a lot, and then I just thought, oh, this mint's coming up. It actually looks pretty cool. It looked interesting. There's a few people talking about it at the time, not much. And I think it took 4 or 5 days to mint out, didn't it?
Yeah.
Or they
Something
didn't
like
even
that.
mint out in like
Yeah.
1 second. No
Shit.
minting bots were around at that time. So yeah, we just minted quite a few, and then that was that.
Although I wish it was one of the ones I minted a few hundred on.
I
Because
wish
you
I
could
minted
have.
100 and
You could
forgot
have.
about it.
You guys
yeah.
minted single digits or double digits?
I was
double digits.
Yeah,
Wow,
yeah,
it was
but-
double digits.
yeah.
Yeah, I had a really rare one, but I let that go.
same,
No,
yeah.
Obviously, I just wanted to donate. You know, just gave it away practically for free.
Are you into NFTs as well? Or what was
Yeah.
your strategy?
I think I have more of a trader mindset. I look for consistent returns. I don't invest as much in a bear market. I have an allocation for investing, early allocations, private seed rounds, etc. I look for heavy in stable coin at the moment in hyper volatile markets. I DCA in once it hits a certain level. Anything ETH below 1400, just DCA in. Doesn't matter if it goes down to 200. I don't care. It's you just DCA in because your average is going to be pretty low at the end. So sure, ETH and Bitcoin. I do a lot of O2Cs at the moment. I do a lot of short-term, medium-term, smaller cap coins, medium cap coins that I look at, both the fundamentals and the technical analysis. So, but I'm not. I have an allocation that's like, okay, degen, let's go into the stupid stuff. But as a trading strategy overall, I'm a little bit more conservative. I take profit. I DCA on the way up as well. The goal is always get principal back.
Yeah.
And then you can play
Degen.
around however much you want. But it's also because, running a fund, you have to be a little bit more conservative than I would maybe be with like just a personal allocation where I could just go crazy with whatever I want, right? But NFTs, Brian's our alpha, right? So we just, whatever Brian buys, we buy. Not so heavy anymore. I used to flip a lot of NFTs, but those are the more that I invest in at the moment and hold. Yeah.
And with NFTs too, don't forget you're getting access to a community, sometimes a network, things like that. So if I buy a Moonbird, for instance, I think it's going to probably do something long term, but it's not really the main point. I want access to the community, so it's those kind of things that I'm looking for as well. Especially right now, it's like I wouldn't be investing per se in terms of thinking it of like a flip. I'm more thinking it of like, is there a value of this community? Yes,
information.
okay, I want to join Proof Collective or whatever. Okay, join that, and you get a value out of the community. And sometimes it's small communities too. There's some really viral, really engaged communities that you see like engaging with your tweets and things like that. And I sometimes jump on those because I say, wow, this community is like really on top of things. And those are like attractive to me when I see that kind of engagement. But I don't really particularly care sometimes what the floor is and things like that. It's like, oh, this is a cool project, good art, etc. So maybe go into it. So and I like supporting artists. I think obviously NFTs have paved the way for digital artists. Before digital artists, it was like, all right, click save as, and it's hard to sell an original piece. Now you get the Beeples of the world selling, $90 million NFTs or whatever the price was. You just couldn't do that before because there was no way to like prove an original piece. So now you can. So
Who's that other artist? Is it X-Copy, right? He does the one-on-one.
Yeah.
I quite like those.
Yeah.
Oh, interesting. And I think you mentioned a bit of you were holding a bit of stable coins. So was it mainly USDT, USDC? Because I think one thing like most of us know right now is there's like a lot of FUD going around USDT. So like, what do you guys think about that far.
I'm 100% UST at the moment. How's that doing?
Oh, we were all USD.
What happened to it? Oh, no.
Yeah, I only do USDC, backed by Circle, backed 1-to-1 by dollars. I don't necessarily. I'm not a big fan of USDT and their so-called reserves. I don't want to FUD it. I don't have anything against it. I just feel a little bit more secure with USDC. Also, again, with running compliance and funds and all that is USDC.
I'm actually split 50-50 USDC and T, just from a hedging point of view. I mean, I think I actually put half into USDT when Tornado Cash got added to the OFAC list, and then the whole FUD of USDC came. I was like, oh, I've never used Tornado Cash, but the fact that happened, I just thought, you know what, let me just split it equally.
Yeah, I think USDC has a big shot at becoming like the default digital currency in the US potentially. It just seems like it's trending that direction. You have Circle heavily supporting it, which is what Goldman's. And it seems like they're going to become and Tether's obviously got a lot of FUD around it. So I don't know if they would be, and there's not really another contender at the moment. I don't know if there will be. So yeah, I typically USDC mainly for stable coins.
All right. So you guys have been in crypto for years, and one thing I want to know, what were your most degen stories in crypto?
Ooh, I guess I already said the Bored Ape situation, but I guess the biggest one was I got into SHIB very early.
Ooh.
Kind of for fun.
We both did.
Yeah. So I was telling Brian, SHIB.
I think he told me about SHIB actually.
I SHIB, I got into it. I think
Kenny's also the alpha.
Yeah. I think I sold my SHIB for probably about 4x, and I was like, Brian, I sold it for 4x. It's
just for
stupid meme coin, and you just let that go. And I think a year later, the paper value, because you never know with liquidity, but the paper value was probably in the hundreds of millions, right? We're talking 9 figures here, right? Wow. And you're just scared to go back and look at the wallet. I mean, I'd buy things across multiple wallets, but you're scared to go and look because you can see the value in ETH, no USDC, and then SHIB, and then you think, okay, even in this crash now, it still would have been 9 figures, right? So that's probably the biggest one, yeah.
Yeah, I have an interesting NFT story. I'm not going to say which one it was. I don't want to fund the project.
Tell us.
But it was one of the ones you could mint like an unlimited amount, and it was pretty cheap. So I started minting. I minted like 100, and then I kind of forgot about it for a while, and I was distracted with other things. And then I minted again, and then it didn't go through. And then I was distracted. We were working on some other things. And I what's going on? It's not working. And then I checked OpenSea, and I see the floor, like I see the website. I see the number going up, and I'm freaking out. I'm just adding. Okay, now I need 200. I keep going. Then by the time I actually realized that the transactions were going through, and I wasn't really paying attention, and I minted like 800, and like the project was like pretty much dead, but it never really went anywhere. But I convinced, I basically like was the only one buying these things. but then I'm refreshing the site, thinking my transaction
Brian
was
the whale.
I was just doing like 10 things at once and on a call and all these things, and basically not paying too much attention.
Probably had like 99% of the supply.
Yeah, I think I literally have half the supply to this day. So
yeah, that's awesome. Okay, so we're talking about degens, kind of like investments. I got scared there. You want to hear some degen stories, but like some real degen. I've seen some stuff. No, I'm just. I think I went in very early on Ecomi.
Oh, same. I went in there right when it first started. I think at the beginning of last year, or the year before.
I went in really heavy based off some alpha from some friends, and nothing really happened. And they were talking big, and I forgot about it. And then, I got all these messages, and I called it out in one of the whale groups we're in, and I said, oh, Ecomi's going to probably do well. And then it took a little while, and then one day, just ding, 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 bombarded. And I'm like, okay, what's happened? They're like, oh, congrats. Oh, thanks, man. Oh, whoa, I love you. And I'm like, what happened? And it went like 65x overnight.
Wow. Nice.
Wow. Okay. Well, thank you.
Wow. Did you buy the NFTs as well, or just the token?
No, just the token. Yeah. I didn't use because they had. I think they really messed up with they had this platform. You had to change your tokens to some emeralds.
Yeah.
Stuff,
and then you can't cash out something.
Yeah, it was something weird. I was like, no.
Yeah.
That was just too much for me. So that was one of those things that was really like, oh, okay, that's stuff you just throw It was a legit project, I don't know how degen it was, but degen, otherwise, yeah, I've done some of those meme coins that just went, you're like, okay.
And you didn't have any anymore, right?
Yeah, of course. Well, because, again, my mindset now, because when I first got into crypto, when you have 2015, 16 and all that, you're chasing unicorns, like hold, and then bam, winter comes, you lost 95% of your assets. You're like, okay. So now I'm just like, I sell on the way up. The game is, as long as you make money, I don't care if it 1000x's after, as long as I made money, I'm good. I don't have an emotional attachment to it. I make money. That's what
most
I do.
of us just get too greedy and we just
absolutely.
But the greed always, slaps you in the head at some point. So to me, make money. That's the game.
See, it's interesting though, because I kind of had the opposite problem for a long time. I would sell too early, and I noted, and I tracked back a lot of my buys, and yes, I would have made money, but it was like if I just held a little bit longer, in most cases, it would have been like exponentially higher. But I guess potentially I was getting good information and making the right bets. So it was if I held longer, it would have panned out. Shib.
Exactly. And I think because of that, because I downloaded all the information of all my wallets, and I just built a simple model just to see what the price would be at this day, and what I do now is I hold 10% of everything I buy away, and I just lock it away. I think it's like 12%. Every single thing I buy, as long as I've got my initial out, right? 10% just goes away, because you're never going to miss 10% of the profit, right? So, you sell 90%, you're happy, 10%, that could... back. If that trillion exits, fine, and if it goes to zero, also, we're fine. So,
So before we end this podcast, what's one piece of advice you give to startups who want to just be successful, like in Web3 crypto?
I think one of the things that I always tell people is especially with Web3 in NFT communities, things like that, you have access to so many people. You can join these communities, and I have a friend that he was literally practically working at a burger joint literally 6 months ago. He worked his way into these NFT communities. He's now running a project, starting his own project, doing all these things, making a ton of money. He was able to navigate his way in by joining these communities. So you have access. Don't forget, part of the whole thing of Web3 is we're building these communities that people are really engaged in. You're part of a community. You're rocking a PFP. You've got like best friends in these communities that really support each other, and you can join these and do that. So I think networking is important, as we know from the regular sort of entrepreneurial world. But in Web3 specifically, there's more access to people, and more people need to take advantage of it. And you can find a co-founder, you can find an investor, you can find a community, you can find a need for a product, you can find all these things in these other communities who welcome it. You can join a smaller community, a Moonbirds, or even an even cheaper community, a Neo Tokyo, for instance. I think you can get an S2 citizen for like less than $1,000 or something, and there's communities like that where they're more accessible to more people. You can get in there, meet people, find what you need, get a developer, get a marketing team, find co-founders. You have access to all these things, so I think more people need to take advantage of that instead of trying to like chase down some VC and raise $1 million or more. Start actually building, going and recruiting people that have a like-minded vision, and doing that is much more important than trying to run off and raise money, because especially in these bear markets, it's very hard to raise money. So focus more on recruiting the right people, building up a team, make an MVP, do as much as you can, bootstrap to start with, because you have access to those people. So I think that's one like little piece of advice, is you can go do those things way easier than Web 2, honestly. Because in Web 2, previously it was, how do you find these people? It's much harder. You got to go to the events. Where do you really find them? It'd be harder if you didn't already have an existing network. Here you can literally buy your way in, so to speak, to an existing network for relatively low, and become part of that community and capitalize on that.
Yeah, I think that's the most important thing, really. Learn what Web3 is. Respect it. Web3 is not Web 2. Web3 is community based. It's about the community. It's about the big cause. So I would just repeat most of what you say. So I'm just gonna stay at that. Really. That's the most important thing. It's not learning about all the advanced stuff. It's really about understand it and respect it. If you want a sustainable platform or project or company, You have to understand the mentality of Web3.
Also, one other thing too is you don't necessarily have to buy your way into another community. You could make your own community.
Yeah.
Start, draw something. Correct. You download Midjourney and make some AI images. Do something. There's a way. Find an artist. There's a lot of artists out there. You can create your own community. We've created communities in different projects and have our own collectives and things like that. So you can get some friends together and start something and say, hey, send some of your other friends and things like that. Yeah. And you can recruit from within your network. If you do have a network, that's also one way to do it, where you can kind of build your own things as well. PFP projects are still pretty cool, so you can still create some cool art and build a community around it, or join another one. So
I want my Bored Apes back. I'll plus one to what Brian said, basically, right? I think nowadays, and even before, I talked to some, DeFi protocols. They're amazing builders. They build amazing products, but they don't talk to anybody, right? They don't speak to anybody about it. They don't try to collaborate. They don't try to extend their offering out to other people. And I talk with them and I try to advise them to do that. And that's really it. It's the collaborative approach, right? Like these guys just said.
Wow, interesting. And so I understand you guys have a very big following on your each of your Twitter accounts. Let's say you guys want to start a project now. What's the game plan? Start building a project and building a community.
For me, it's always a network. So we just built a community called Affinity Collective, Affinity.xyz. It's a private collective, so we did a different concept. It was more of, hey, instead of having a community that anyone can join, let's make it private and thought experiment and see how that goes, like proof collective kind of thing. But more of an invite only kind of mastermind community. Let's find the best people we know and put them together and just see what happens. So I always go to my network, and I think the biggest tip for networking is to, what people tend to do is human nature. You say, okay, I'm building a project, I need to raise money. I got to go network with investors. Well, now you're going to come off desperate. You need investors, and they're going to smell that a mile away. Investors are sharks. So you need a network when you don't need a network.
Dig the well before you get thirsty. That's the whole thing. I agree. Both having been on both sides, having raised money for several projects, and now being on the investor side of things, I think, I started networking with investors very, very early on. It took me 6 years of networking before I asked for my first investment. And that's exactly what Brian says. You don't want to come off as desperate. Always ask just, how can I help you? And help other people first. But when it comes to building community, I think be relevant and stand for something. That's really important. If you want people to follow you, you got to stand for something. You got to have a message that people will align with. Today we're fortunate enough to have massive networks, so we can start things and get traction pretty quick. But it took us, 30, 40 years to get here, right? So I think if you're new and you want to start a community, stand for something, be really clear on what you stand for, be humble, and engage people who align with your vision. That's the psychology of it, really. There's nothing Web3 really specific. It's psychology and it's human connection, It's just more prevalent in Web3. People appreciate the human connection much more. Especially post-COVID now, where everybody was locked up and now everybody wants to meet up. They're like, oh my God, can I shake your hand? I haven't seen a human being in 2 years. So,
you lose touch after that time, don't you?
Yeah.
All right, that's a wrap. So thank you for watching this episode of the Chain Debrief podcast. Thank you so much, Brian, Sami, and Kenny for coming on to our episode. And we'll see you guys next time. Bye-bye.
Bye.